Good morning. All right. So it is Thursday, September 12th, and we are about 30 minutes before trading begins on Wall Street. And I wanted to have a live stream to take a look at news that's hit the news wires and review some economic news that's come out to see how that news is going to affect stocks. So I'll take a look at the initial jobless claims data and the producer price index data that's come out. And I also wanted to take a look at how that's affecting rates immediately, how it's affecting the market. And then once we're through with the discussion around economics and how it's probably going to affect the Federal Reserve's decision to move interest rates, as well as the forecast for a recession. We'll move into taking a look at some stocks. There's a couple of them that I wanted to review. One of them is MPW, which is a troubled REIT, but I think they fixed or are trying to fix one of the biggest problems they have. And then Kroger announced their earnings. So I haven't updated my analysis on Kroger. I'm a Kroger stockholder. Thought we could do that together. Take a look at the earnings, go through the financial data, go through their financials, update my valuation schedule, and see where they lie. Is that stock discounted or is it being priced at a premium? We'll take a look at Kroger. Now look at some other symbols. There was another request via a comment on a video, LRCX. I'm not sure what company that is, but we'll take a look. And there's some big movers yesterday. We had a huge day yesterday. We had the stock market go down and then it recovered back up. It was a big move. When we have those types of moves, to me, that's volatility. And to me, that means there's a lot of fear in the market. That I think the sentiment is that those big moves are because there's people either in fear or they're afraid of missing out. Semiconductor till the end is on. Good morning. And semiconductor had a huge move. I think it'd be interesting to wait until the market opens, maybe toward the end of the live stream when the market's been open, maybe 20, 30 minutes, and take a look at where semiconductor is for the day. I'm betting that it's going to settle back down. It had a huge move yesterday, and NVDA had some positive news that they're going to be able to sell into countries like Saudi Arabia eventually because the government's going to allow them to. So that was some news that moved NVIDIA. So we'll take a look at that as well as other semiconductor companies. So let's take a look at the economic data. So first, I was really looking for this initial jobless claim report because this was my biggest concern is if jobless claims begin to accelerate, really go up, that really spells bad recession. Bad recessions have a lot of job losses and high unemployment. Well, this came in as expected at 230,000 jobs. The unemployment rate, I don't think is going to move back up. It's at like 4.2 last time I checked. So this report on initial jobless claims is kind of no bad news. And there's no great news, but there's no bad news. It's kind of right there in the middle. So that's good. That's good that, hey, the data is consistent. And if anything, consistent data is going to give the Fed more confidence that, hey, we're seeing data that's real. And I'll expect that with the jobless data they're getting, they should be able to make a good decision in their next meeting. The producer price index was PPI. It also came in a little bit higher. And I don't know if that's a lot to worry about. Actually, it came in a little lower than consensus. And I thought I saw a measure. Yeah. So PPI, excluding food, energy, and trade year over year, came in at 3.3%. So it went up a slight amount. I don't think there's any news there. Overall, I like the two reports we saw, the one yesterday and the one today, the data came in as forecasted based on consensus, right? That's good. When data behaves in a consistent manner, it's going to give the Fed confidence that, hey, we're seeing the data, the inflation is being controlled, the jobless rate isn't accelerating and going up too high. So I would guess that they're probably going to make a 50 basis point move in September. They can always go 25 basis points, but I think that all the data is supporting that, hey, the economy is slowing down, but it's not slowing down terribly, and inflation is being tamed. So the acceleration of interest rates that occurred 2 years ago was extreme. So I think the Fed's got some work to do to get interest rates down. Another reason why I think they're going to move at 50 basis points is I think they want to move 50 basis points and then not make another decision until after the election. They don't want to add more noise to what is going to be a noisy situation with the presidential election as well as other elections going on locally. That happened at the very beginning of November. So I think they can do their job in September, look at the data, make a decision, and then go away until mid-November where they could act again, or December. So we'll see what happens, but I think it's good news to me. Consistent economic data is good news, that it's not going to be a catalyst to move stocks down. There's no catalyst to move stocks up, but it's not going to create more fear and concern in the eyes of investors. Having said all that, let's take a look and see where markets are behaving. So first, let's look at bond rates. Bond rates are, make sure this is current. So bond rates are pretty much flat. Interest rates on bonds, and this is truly the measure of where interest rates are, is U.S. Treasuries. But it looks like it's pretty flat. Very, very small movement. They've ticked down, but that's not a whole lot. That's not enough to really focus on. When we look at Dow futures are up slightly, S&P up slightly, NASDAQ down slightly. Crude oil is up again, but it's got a long ways to go. It's really dropped. Crude oil has dropped substantially, and it's got a lot of up room to go because it's dropped so much. As well as crypto, it's moving up today. BTC is up 2.2%. Ethereum is up 3.78%. It also has a lot of losses to recover. Crypto's really been down. Oil's been down a lot. Those commodities, why is that happening? I guess I know that a couple of weeks ago, the narrative that was being talked about a lot is recession's coming. And I still believe that. I still think we're going to have a recession to some extent. And that's why oil prices went down, because there's plenty of inventory. And if we have a recession, there's lower consumption of oil. Okay, that makes sense, as well as other commodities. Now that we are expecting, okay, well, if we do have a recession, it's not going to be all that bad. And I never thought it was going to be like really bad, like the subprime mortgage meltdown that caused, I guess it was labeled the Great Recession in the 2008, 2009, 2010 period. So that's all there. So interesting to know. We'll take an eye on, we'll look at the markets a little later and see how they're doing after the market opens. All right, so it looks like we've got a good number of people online. Thanks for joining Do Me Trash till the end. Thank you for joining. Soren, you'd like to look at ADM? We can look at ADM. And Sebastian. So next tracker. We'll take a look at next tracker and then Ternium. I own Ternium, so I can go pretty deep on that one. So Alta, why do you think Kroger is a better company than Albertson? That's a very good news, and I can take that on. Besides Chevron, what are the best oil stocks? Okay, let's talk about oil companies. I think we've been covering, oil companies quite a bit over the last week or so because the stock prices are really low. I'm happy to comment on that. We'll do that a little bit later. I think, Chevron is a good stock, but I think there's other stocks that are performing better and potentially have pretty good upside. So I'll provide those comments a little later. All right, to get started, I'm going to start talking about MPW, since that was I've heard from multiple people that were interested in MPW. And big reason is that it's up 13% in the pre-market. I think the news is that they are getting control of the properties. And thanks for the comments, Doomy Trash. I think Doomy Trash was providing the informative comments. Yeah, so I think you can read the comment yourself in the chat. And they've had their biggest tenant got into financial trouble. They haven't been able to pay their leases. So that's put a big strain on the MPW financials to the point where, they've struggled. And it's become a target to short sellers. And the short selling is 39%. Oh, man, that's huge. So this might be a stock that squeezes, but we'll see. I can't predict those. But, man, 39% is a very high percentage. So that's interesting. The news is favorable that the stock's going to rise. But if you look at this stock over the past year, it's down 25%. And we're down to a pretty low number in a low valuation. Historically, this was like a $20 stock. And then their biggest tenant got into financial trouble. And that's what caused, a big drop down to below $5 per share. So I think, I was a stockholder for a while, and I decided to sell my shares and get out. Let's take a look to see if the situation has changed enough for me to want to get back in. So if you don't know MPW, they're a real estate investment trust, and they basically lease out commercial space to hospitals, health providers, even some mental health providers. So that's their space. I like healthcare. It's stable. It's more stable than other areas. The company, again, their biggest tenant is where they got themselves in a lot of trouble. And I want to look for press releases. Here we go. See what kind of new news they have. So they don't have the new press release that I think Doomy Trash was referring to. It was probably reported elsewhere. All right. So in essence, the reason that I got out of MPW is it seems like they're repairing the business. They're working through, getting that big lessee to basically get out of their property, or they take control of the properties and so forth. And yeah, that's true. And I waited, I don't know, a year, maybe longer, and it just didn't move. And so at the end, I really wanted better quality in my portfolio. And I think if you follow my channel, you know that I like companies that are in the green, that are just really exceptional companies that have strong moats and command really high valuations. I will invest in the gray, which is real estate investment trusts that are just good, consistent companies. If you buy them at a good discount, you stand to make good money. I thought that, our friends at MPW were definitely had a foot in the red when I invested in them. And I was hoping they'd move clearly into the gray, meaning they're going to get on strong footing and move forward. But it just was taking too long. And I had to really be critical of their management. Somehow somebody did not qualify that lessee well enough. And when you have your biggest tenant have financial trouble, something was missed. Somebody didn't analyze the company right. They weren't able to really protect themselves as well as they can. So that mismanagement of their assets, that's a concern. So I feel like right now MPW is like straddling the gray and straddling the red, meaning, if they don't pull out of this, downward spiral and they go into some type of Chapter 11, they're going to be liquidated and the assets are worth something. Okay. And they'll be sold off to some other real estate investment trust or whomever, and then move on. But this whole thing, whether, how quickly they're going to move back into the gray or are they going to go into the red, I don't make money by following soap operas. I make money by trying to find companies that are underappreciated. They're discounted. And in the next 5 years, I can double my money. That's the story. That's what I need to find. That's my lane. I make money. I make lots of money if I find companies that fit that type of profile and will follow that type of trend. Am I going to make all my picks perfect? No, but I just need a winning record. If 7 out of my 10 decisions on buying a stock work out, I make plenty of money. And buying stocks and holding for the long term enable those companies to make money for me. They work for me. They make money while I sleep. I wake up and they went up in value. I wake up in the morning, they paid me dividends. So all that stuff's good. So this is my recipe for success. And MPW, I hoped would show some movement toward the gray as I own the stock. It just didn't make enough progress. And every inkling of good news, as it should, it makes the stock rally. And for all the stockholders of MPW, I hope the stock rallies. I hope you four-bag your investment. I hope you make a ton of money, okay? Because a lot of you guys have been watching my channel for a long time. That's truly what I want, but it's just too much of a distraction. And I got it out of my portfolio. I really upped the quality of my portfolio and wanted to buy companies that are really just, my first choice is companies in the green that are just strong moats. They're almost a monopoly. And in some ways, they're already classified a monopoly. Like the government said, hey, Google, you're a monopoly in search. You do that so well, nobody can compete with you. Okay, that's the kind of business I want. I don't think Google is doing anything evil. They're just really good. Or you got like Live Nation, the government said, you guys are so good, you're dominant in live act ticketing. Okay, ditto. Consumers really like using Live Nation, or they get some kind of value, and artists want to use Live Nation. So those are examples of companies in the green. And I want to be in the green. I don't want to be in the red. In the red, it's like unreliable. And instead of companies making money while I sleep, I wake up and, oh no, this company did something else that is making the stock price go down. Investing is hard enough. And I'll give you an example of like Nike. I started buying into Nike and it tanked. Even a quality company like Nike went down in value. And I bought more because I feel that Nike is a really valuable company. I'm doing well with the investment. I think it's going to be worth more than double over the next 5 years. I still believe that about Nike. I believe Nike's in the green. So that's my story on MPW. And again, I wish everybody owns MTW. I hope you guys four-bag. I hope you squeeze those shorts. I short stocks, but I've never shorted a small company. I've never dogpiled on a company that's already struggling. I don't think it's the zone that I want to operate in. I usually go after really expensive stocks that I think are going to drop in value. So I've shorted like CrowdStrike, Super Microcomputer, NVDA, Apple. Okay, so I'm not going after kind of like the sick puppies out there for stocks. I'm not that type of short seller. I'm more of a long-term investor. So good luck with MPW, guys. And, obviously keep me up to speed like you guys have been, commenting on MPW. And again, I hope you guys make a ton of money. Shadow Guy, good morning or good afternoon since you're in Europe. And then Doomy Trash. So it looks like they settled with Stewart and they found 15 new tenants for the hospitals. Very good. I hope that news happens. And FYI, I'm going to keep an eye on them. I have one REIT right now, and that's somewhat related, CTRE. And CTRE is done really well. They're in the healthcare space. If you have somebody that's up there in age and they needed to live somewhere where they need some type of medical assistance, supervision, and so forth, they go live in one of their properties. You might be living there for 6 months, a year, something like that. And these guys have just done really well. It's been a good stock for me. They pay a nice dividend, and I'm good to go on a REIT. I owned like $45,000 of this REIT, and that's good. I thought MPW would be a high appreciating stock, but it never did for me. I hope it does for you guys, but I'm good with a REIT. I'm good with a REIT in my portfolio. And I also own real estate that I rent out directly to residential tenants. All right, so that was MPW. Shadow Guy. So Clove. So what was Clove? It's early in my day. I'm on the West Coast. And it looks like I got a response on Discord. Late breaking news. So let me take a look at that and see what that's about. And I'm not up to speed on Clove, but Clover Health Investments, these guys provides medical. Okay, so this is a healthcare payer. They do Medicare. I think my conclusion, I didn't like them as much as I like other healthcare payers. Part of it was that they were losing money, right? And I think their free cash flow is also negative. So I can't work with a company that's losing money and free cash flow is negative. So that was kind of a pass for me. And I have so many other options. Let's just remember, we have thousands of stocks to pick from. There's no rule that I have to buy one stock or another stock. I can buy whichever one I want. If I want to be in a sector or in an industry, I can look at my 10, 20 choices and say, this is the right one for me. It's the right, I expect the best return out of it. And then I go along those lines. I'm not finding the comment on Discord, and I'm going to move on. But I thought Clove was a pass for me, and we'll see what happens. It was up quite a bit yesterday, and it's up in the pre-market. So we'll see what happens there. But if you have another comment, Shadow Guy, please put it in there. I'm not quite following. And if you want to comment more, I'd appreciate it. But I think I'm going to move on and pass on Clove. And then Doomy Trash. Yeah, I already read that one. Okay, cool. Yeah, I mean, Doomy Trash, I hope MTW works out. So I'll double down on that sentiment and hopefully it works for you guys. Okay, so let's get back to Kroger. So the market has not opened. Let's see where Kroger is trading in pre-market. So their earnings were announced an hour ago, and stock is moving to the upside. So the stock market likes the announcement. Let's take a look at the details. So one thing I would say about Kroger is it's a very well operated company. They focus on grocery. That's their primary business. It's the biggest grocer in the US, pure play grocer. Now they have to compete against Walmart, Target, Amazon, who continues to grow their footprint of grocery. Now, the one thing that I think Kroger is really good at is they're in good partnership with the stockholder. When you look at their financials, you look at their releases, they really communicate well with stockholders. They share everything that you need to know as a stockholder, and I appreciate that. It feels like a true partnership with company and stockholder on the Kroger side. So identical sales without fuel went up 1.2%. This is grocery. Let's keep that in mind. Now, what's good about grocery is if we do have a recession, it's not a bad place to be, because no matter how bad the recession is, we got to eat. We got to go there and get our eggs and our milk and our groceries. So slow growth is expected out of this company. That's what I expect. They achieved strong adjusted free cash flow. They grew digital sales by 11%. Okay. It is a small number, but they grew it. That's good. So very good. They're trying to acquire Albertsons, and the FTC, I think the Trade Commission, is standing in front of it saying, no, we don't want you to be that powerful. Now, I would argue that it's a lady, so I would say, ma'am, I get your point, but Kroger has to compete against Walmart. They're humongous. If you're saying Walmart, you're going to be too big, I think you're not putting them in the context of they're competing against Walmart. Oh, who's their other competitor? Amazon. So, and then the third competitor, Target. So, I would share that with them that, hey, you may be hurting Kroger and Albertsons because they're going to be smaller fish that now have to swim in a pretty big pond against Amazon, $2 trillion valuation, super powerful, well capitalized. Walmart, huge market cap, has diversified retail operations, massive company, also has big box retail through their Sam's Club operation. And then Target, ditto. It's probably the smaller of those two massive companies. But what I would say is, I don't get it. You're limiting Kroger, but the context of their industry is really changing. These big box retailers are selling food. That's what I would say. But we'll see what they say, what they do. I think they should allow it, because especially Albertsons is going to be very weak. If this doesn't happen, Albertsons is going to be a tiny fish in the pond, and it's going to be hard for them to compete against Walmart, Amazon, and Target. As we look at operating profit was good. Adjusted cash flow was 2.5 to 2.7. Okay, good. All right, good. Now let's look at their financials. Then I'm going to update the valuation on Kroger. So sales in the second quarter went up slightly. And year to date as well, they went up slightly. So very little growth. Net income was good. Okay. Cash balance is a little lower, but it stayed about the same in 1 year's time. Long-term debt is about the same, a little bit lower. Now, if they acquire Albertsons, the debt is going to go up. So, that's expected because they're acquiring such a big company that's going to make them bigger. So on free cash flow, so year to date, cash from operations is not as good as last year by about $900 million. And yeah, their free cash flow in year to date is not as good as last year. It looks like it's 3.4 minus plant property equipment is 2.1. So they're netting about 1.3. Now, I believe I'm using their guided free cash flow, and they guide quite accurately. So we'll take a look at that next. Okay, so all right, so I'm gonna open this guy up. I'm gonna move this this tab over to another screen and find the intrinsic value for Kroger, and we can update that. All right, so last time I updated it was June 20th. It is the 12th of September. And this is my estimated cash flow based on the guidance that the company provides, and they have been pretty accurate. And the next quarter is going to include like Thanksgiving, and pretty good volume of groceries will be included in the next quarter, so that'll be good. And the growth rate on their cash flow is 7%, 3% long term. So those are my variables there. Now, what I am going to update is their market cap, which moves up and down, as well as their stock price. So the market has opened. The stock price moved to $52.14. The market cap is $37 billion, $170 million. All right, so I'm waiting on Microsoft on this. Give it a minute, but we'll update that. All right, so moving on to earnings per share while my system updates there. So this stock is covered by 12 analysts, and they think the stock is discounted by 11%. The earnings per share is $4.58 in the current year, and then $4.68 next year. So modest growth over the next 3 years, but very consistent. Like the earnings per share is going to be a little bit more, but all 3 years are consistent. This is the grocery business. This is a very mature industry. It should operate effectively. So that number was 37,120. So earnings per share is a little higher, but about the same. PE stays the same. Growth rate, 3%, might be a little optimistic. So overall, I still think Kroger is discounted by 29%. My investment in Kroger, I think, has been good. So I'll need to update. Stock price is 52. Okay. And so the value of the shares that I own for Kroger are worth, call it $59,000, and I've invested $50,000. Now this is a stable company, continues to go up. It provides a decent dividend of over 2%. So that's where it's at in my portfolio. It is a steady stock. It's the only consumer staple stock that I own. I'm not a big consumer staple stock holder. This is the one that I own, and I like that it's consistent. It's based on food, which is a category of products that we're going to need no matter what. So that's why I'm willing to, just keep Kroger there. It's a steady stock and keep it in my income portfolio. It pays a decent dividend at 2.49. So that's good. So overall, that's Kroger. Their announcements, again, they have a good partnership with stockholders. They rarely surprise, and they have a very good presentation on their website. Each quarter, they put out a very good presentation. I think they're they have a standard of reporting that's as good as anybody, even comparing them to Microsoft or Google Alphabet. Kroger really does a great job. So that's my update on Kroger. I'm going to do a video a little later and then put it on the channel because a lot of people are interested in Kroger. I think it's a steady stock that a lot of investors like to own. Okay, so let me catch up here. So we talked about, Mike, the dividend investor guy, we already talked about MPW, sir. And hopefully you can watch the recording and take a look at it. So do me trash. Yeah, so Dimitrash has been providing really good detail, man. So NVIDIA stock split, WTH. So so I'll look at NVIDIA a little later. They did their split, was it 2 months ago? So I'm not sure that the split has anything to do with today's stock price. It went up 8% yesterday, I believe. Shadow Guy. Kroger has a decent bond selection too. Yeah, I agree. So bonds issued out by Kroger and Albertsons. I do own bonds from Kroger, and I might own one from Albertsons. Those are pretty safe bonds. They're issued out by companies with good balance sheets in the food industry. And I'm going to, just from memory, I make like 6% on those bonds. And bonds don't move up or down like stocks, but they pay that nice yield of 6%. So I'll take it. All right. So, yeah. So, Jimmy Trash, thanks for that extra comment. And we're caught up on MPW. All right. So, let's look at LRCX. I think somebody did know what that symbol was for. And I got to learn how to type. Lamb Research. Yeah, these guys were up a lot in the last, I think here it was a pretty good bump. Well, last month they're up like 1%. Over the 1 year, 14.68. Lamb Research designs, manufactures, markets, refurbishes, and services semiconductor processing equipment. So they sell the equipment to foundries that manufacture semiconductors. That's what they do. Now, the demand for semiconductors is supposed to go up because this data center build out is supposed to be really happening. So let's take a look at this company and see what we're looking at. So this is a reasonable market cap if you consider 99.6 billion, right? NVIDIA's near 3 trillion. Revenue is 14.9 billion. We'll take a look at growth later. PE is at 26, forward P is at 21.4. It's a strong buy with a 28% discount according to analysts. Okay, so, all right. Let's take a look at their revenue growth. So this is what is a paradox about the whole semiconductor, is hot. Is okay, semiconductors are hot, but nobody's buying equipment to build out more foundries. That's kind of a paradox, right? How can semiconductor stocks say we're going to have extreme volumes of new semiconductors for AI, but then Lam Research isn't seeing a lot of revenue? That's a paradox. If we look at the quarterly, the latest quarter, 20%. That's very good. Has it made a turn? Has Lam Research made a turn and is heading up? That'd be interesting to follow. I like buying stocks when nobody likes them. Everybody hates them. Good quality company. Buy them low. Watch them go high. Make money. Nothing wrong with that. And I went to the wrong tab. So let's see if this guy is fitting into that profile. So we've got good revenue growth in the quarter. Move this back to the annual view. Their free cash flow is solid at $4.2 billion. And I like see this data set. I like it, right? They were once a 2 billion free cash flow generating company. They went to 3, went back down to 2.5, but now they're in the 4s. So that type of, they generated free cash, and now the free cash has gone up. And they are growing, so I would expect this free cash is going to grow. It is in a desirable industry. I would say that this company is worth about $84 billion because I'm going to take this number times 20. And just back of the napkin, it's worth about $84 billion. And they're trading at close to $100 billion, right? So it's a little overpriced. Just from back of the napkin. Let's see what analysts are saying on, and let's look at the balance sheet really quick just to make sure doesn't have a ton of debt. So it's got 5.8 billion in cash, and total debt is low, 5 points. So they can literally pay all their debt off quite quickly. So good balance sheet. Good cash flow. It's just priced kind of high. If we look at the 5-year, yeah, it's been going up nicely. I mean, you should be a happy camper if you've owned this thing for 5 years. It's more than doubled. So very good. It's just, I don't know if it's going to double in the next, 5 years again. If it grows nicely, maybe, but it's going to, I think a lot of optimism is priced into that stock price. So it might be hard for it to grow above that. So analysts, there's 21 analysts that cover this stock, and they think, hey, it's really discounted if you look at earnings per share. And earnings per share is for the current year, and they might have a fiscal year that ended June 30th. Okay, so for the new fiscal year, which would be now, it's $36 per share, and it's going to grow nicely next year, and then grow by a fair amount in 2027 fiscal year. So that looks good, but I base most of my valuation on free cash flows. So Lamb Research, let me look at it here because I like the graphs that I get on Google. LRCX. So what's going on with this stock? So we had a nice bump up. I saw this. I could have sworn this one had a nice day. Yeah. So that's what it did. Yeah, this one's not ready to go for me. It's a pass because I think the stock has really risen over the last 5 years. And especially since, all stocks were kind of given a haircut in 2022, but it's really risen quite a lot. And you saw that their revenues were actually contracting for like 6 quarters. Well, the stock price shouldn't have been going up this high if their revenue is contracting. That defies logic. It's like, why is the stock price going up if revenue is going down? It's a mark that the business isn't as healthy as it should be. You should be growing your revenue, especially if the context and the trend is, hey, we're building out these data centers. We need more semiconductors. If that's the case, this company should have been growing. So there's some question marks out there. I think the stock price is a little too high. So it's a pass. I think semiconductor and companies related to semiconductor, they're priced quite high. So shouldn't be a giant surprise. And if you follow my channel, I've been saying that for a year. So that's my comment on Lamb Research. All right. So looks like Hawker 1000, Marathon ticker, MPC. So Marathon Petroleum. Okay, let's segue into, are there some good oil stocks out there? So oil is up 1%. Oil, I'm going to start with looking at oil prices first, and then we're going to talk about Marathon. So oil prices go up and down. Here's where they've been over the last 5 years. And when they really moved, like 2020, right, oil prices collapsed because nobody was driving around. Everybody was sent home. A lot of people were like sitting on their hands, not driving their cars. Bus service was limited and so forth. But as the oil prices went up, it really made oil stocks work. Since then, oil prices have kind of behaved. They've kind of gone up and down within a range of like $60 a barrel. I would say $64 a barrel and up to like $90 a barrel. More recently, it's down to mid to high $60 range. I don't think it's going to stay there. I'm not a forecaster for oil, but I would expect that it's going to go up $10, $20 over the next 6 months or so. When that happens, I think it's going to benefit oil stocks. Now, you have your choices in oil. You have big, massive companies like Exxon being the biggest, Chevron being the second biggest. Those are fully integrated. They do everything in the oil complex. They explore it, they refine it, they sell it as a petroleum product at a retail gas station that you probably see when you drive around. Marathon, what do they do? Let's take a look at Marathon. And are they an oil exploration company, meaning they're upstream, or are they downstream a retailer? So let's take a look at that. And then Shadow Guy had a question. I need help. What does that oil price on Google actually mean? Is it a futures contract, price per barrel, or current? It's current. It's like if you make a contract today, I want to buy oil, that's the price. And it is pegged. Sometimes you have contracts that say, I agree to supply you oil, but we're going to peg it to the daily price that comes. Some companies want to take the risk off, like airlines, and Southwest was good at this. Southwest has plenty of problems these days, but what they would do is they would buy contracts. It would say, okay, for the next 10 years, I want this oil price. I want this fuel cost price. And they're able to do that because they have a very strong balance sheet. The oil companies are not going to get into a contract with somebody who's not creditworthy, and they're willing to do that. And kind of both sides win because the oil company has a good price that they could sell at, and the customer, in this case, Southwest, has a price. So that could be done, but few companies do that because you have to have a strong balance sheet, and then you're committing to that oil price, which could come back and bite you. So the oil price we saw on Google is today's price if you wanted to buy oil. So Marathon Petroleum, together with its subs, operates an integrated downstream energy company. Downstream means retail. That means it's been refined and it's getting to the gasoline station and we're filling up our cars with it. The company operates through refining and marketing and midstream segments. So they do part of the refining process. Okay. Okay. So over the last year, it's up 2%, 5 years up 230%. Very good. So it's had a good return for 5 years, and more recently, it's really down. It's a $53 billion market cap company. Revenues are 3x the market cap. PE is really low. The thing about, downstream is, their revenues are down because, like gasoline in my area, I'm in Southern California, the price is substantially lower. It's down $1.25 less expensive than it was a year ago. That's good for the consumer, but it's bad for Marathon and Chevron and Exxon, who are like, well, we want to charge more at the pump, but that's just reality. So their revenues are down because the price of gasoline to the end customer is down, not that they're operating poorly. So that's the reality of their revenues. When we look at their free cash, they produce really good free cash, but again, that lower fuel cost, lower price is showing up in free cash. If the price goes up, they generate more free cash. So that's interesting that they still hold $8.8 billion. So based on 8.8, these guys are discounted. I would think that they're worth probably $80 billion in value. And let me make sure their debt isn't a big problem. So cash, 8.5 billion. Total debt, 30 billion. So they're worth like 60 to 70 billion. And so they have a nice discount. It's not a bad time to be thinking about oil companies because oil prices are down, but they're not going to stay down forever. I'm good with Chevron. It's a more than $100,000 investment on or position on my portfolio. This isn't a bad idea, and this is a smaller oil company. They're downstream, which isn't a bad space. The oil explorers are like Occidental. That's upstream. And that's the stock that Warren Buffett has. But I like the idea of maybe going to a mid-market or mid-sized oil company and seeing if you can pick up value. It's not a bad idea. The dividend, surprisingly, is a little bit low. Oil companies, energy companies usually pay a very good dividend rate. But if they're giving you good appreciation, you know, the dividend is, I don't invest based on dividend rate. I invest based on value of their cash flows, and earnings per share is an influence as well. So not a bad move. The forecast, they have 11 analysts covering Marathon, and earnings per share $11.58. It's expected to grow next year and the year after that. So based on that, analysts think it's discounted. So right now, it's not a bad idea. I think it would certainly follow this particular recipe for making money. Is, hey, let's buy stocks when nobody wants them. They're discounted. Quality companies are being sold off. You buy them, a year later, the environment changes and they're worth 30% more. Beautiful. So that might happen with oil companies. And that was a good idea. I'm glad you thought of, and here's something that's interesting about our community is oil's come up multiple times. So you guys are thinking, okay, oil stocks are down. Is it a good idea to buy? Very good thought. Shipping companies, ocean freight companies, they've been going up. I'm sorry. They have been brought up quite a bit on this community. And that is interesting. I mean, I just kind of like go, whoa, everybody's looking into shipping companies. I would say in the last week, those two have been quite popular, as well as like semiconductor. But interesting. So good luck with oil companies. Not a bad place to be looking for good stocks to buy when the buying is good. All right. So we went over that. I think I owed somebody a review of ADM. Is that the food company? Yeah, Archer Daniels. Okay. So these guys are a consumer staple, I believe. Yeah, consumer staple farm products. So they are in the procurement, storage, transportation of agricultural commodities, ingredients, flavors, solutions in the U.S., Switzerland, Cayman Islands, Brazil, Mexico, Canada, United Kingdom, internationally. Okay, cool. It is a consumer staple. Dividend rate looks pretty good. Nice low market cap of $28 billion. Revenue has been going down. Interesting. So why is revenue going down? Now, we did have high inflation here, right? Remember how inflation was really high, 9%, and food prices were really high, if you recall. So I think as inflation has been controlled, Archer Daniels has had a problem showing growth on their revenue. So that might make sense. Okay, so I get that. Free cash flow wise, they have $3.1 billion of free cash, and they've been operating good cash flow for the last 3 full years. They had a bad year in 2020, but I give everybody a pass for 2020. It's COVID, and it disrupted them. Now, at this, let me take a look at their balance sheet. Right now, I'm thinking this company, I could value them 30 to 40 billion in value, depending on the balance sheet. So they have $764 million of cash and total debt of almost 12 billion. So this one here, it is a pass for me. I think they're fairly priced. I think they're priced a little bit at a premium, because if I look at their valuation would land around 32 billion, but then if I take away debt, it brings it down to like 24 billion. So I'm going to be a passer of Archer Daniels. I'm not a big fan of consumer staples because it just goes up a little bit, down a little bit. 5-year rate of return is 55%. It's like, man, I'd rather take my chances with some higher growing companies in other industries and nail a couple that are a 200% rate of return. So I'm going to be a passer of ADM. I think it's a stable company if that's what you're looking for. Pays a dividend if that's what you're looking for. But one thing I would comment is, if dividend is what you're really looking for, is look at bonds. I have access to bonds that pay a better yield than 3.4%. And bonds are not going to expose you to the risk that a stock exposes you to. So, hey, I'd rather earn 5% from a bond, and it doesn't have the downside risk that a stock has. What if Archer Daniels, something happens and, oh no, big problem with the company? Now, can they double in price very quickly? Not really. This is the food industry, and these guys are big commodity players. So it's just not the right stock for me. I'm already in Kroger, as covered earlier in the stream, and I'm good to go on Kroger. It's doing just fine. I kind of have a good staple there around food, and I'm good to go. I'm going to be a passer of ADM. Okay, so Hawker 1000. So yeah, so you're back to Marathon. They're doing buybacks. Okay, cool. David Goddard, can you look at Cabo? We'll put that on the list. Mike, the dividend investor guy. ADM had an accounting issue. Okay, interesting. Till the end. What about Joby? All right, I'll put that on the list and make sure I'm covering the stocks that I wanted to cover. All right, we went over Kroger. We went over oil companies. Let's take a look at Cabo. Before we do that, let me take a quick glance at where the markets are trading. So is that correct? So markets are down a little bit. So the Dow is down 0.34%. NASDAQ is down 0.1%. S&P down 0.21%. Crypto is still up a bit. The Russell's up a little bit, and the VIX is up. So this is a time where I think, as we process that economic data, more importantly, right, is you look at what's been going on with the stock market. The amount of volatility really peaked, especially that 1 week where we had big losses, and the volatility is still high, and this thing can still spike, right? And volatility, basically, it's a lagging indicator. It's the rear view mirror, but it's almost like seeing yesterday's data, and yesterday's data may be useful today if there's a lot of fear in the market, because that would cause additional sell-offs. So the market's pretty flat, a little bit toward the downside. Let me look at sectors and see what's going on with sectors. See which sectors are having a good day, which ones are having a bad day. So communication services are having a good day. Materials, consumer discretionary, energy, consumer staples. Technology is lagging. Okay, that's what's lagging the market. When I look at technology and I look at the one-day change, looks like the solar stocks really rallied. I believe the story was that the Democratic candidate had a good debate. So yesterday, people were excited about solar stocks. Well, if there's a Democrat in the White House, solar stocks are going to really work. And maybe, but they really went up a lot yesterday, and now they're back down. Semiconductors down 1.59. I kind of expected that because yesterday was such a good day. I thought they'd get back some of their gains today. So that's interesting. Angelo, so LRCX, we covered it. So this live stream will be recorded. please take a peek, and you can watch the replay. Okay, so that's what the market's doing. I think we wanted to look at Cabo. CABO. And that's Cable One. Cable One, together with its subs, provides data, video, and voice services. Okay. So I like this segment, but I hate the amount of debt that these companies have to put on their balance sheets. Let's see if this one's different. I've never seen Cable One. I've looked at AT&T and I've looked at Verizon, and I don't like their balance sheets, but maybe this one's different. It's a nice low market cap. They're about 1-to-1 if you look at sales to market cap. PE is really low, forward PE. Okay, good. Dividend looks nice. And then, hey, analysts say it's discounted by 75%, but they don't want you to buy it. That's a bad joke. All right, so why is revenue going down? That's interesting. So revenue has been red for the last 8 quarters, and it's red last full year, and for what would be 2 quarters included in this year. So this is a concern. Why is their revenue going down? This is like broadband, right? It's one of those things where once you get a customer, they don't leave. Like I have my internet service. I have the fastest fiber internet service that I can get a hold of. And they actually had to upgrade our wiring in the whole area, like the neighborhood. And once they did, I subscribed to AT&T and I have 1 gigabyte speed. It's super fast. And before that, I had 300 MP, whatever. And for the same price, I got 1 gig and I switched from Cox to AT&T. I was on Cox for like 22 years. No, I was on AT&T, then Cox, then back to AT&T. So these decisions, people make them and they stick around for like 10, 20 years. So why is their revenue dropping, right? Prices don't go down on communication services. So there's some homework there. Why is revenue dropping? That doesn't make any sense. All right, moving on to see if it's worth investing time into doing homework there. So 321 million of free cash is very good. If I price this company, it'd be, let's look at their balance sheet first, because these companies, again, they tend to have a lot of debt, and I don't like high debt. High debt is risky. Ask our friends at MPW how long-term leases and debt could be a problem. So debt is 3.5 billion, and cash is 228 billion. So their net debt is going to be about $3.3 billion. Their EBITDA is 800. So it's 4, right? You divide 3.2 billion by 800 million. That's a 4. That's too high. That means it takes them 4 years, a little over 4 years to pay off their debt if they devoted their EBITDA to paying off debt. I don't like balance sheets in this space. That's why the valuations of AT&T and Verizon are terrible. This valuation is low. I'm not in this space. The closest I got was Comcast. Comcast does have a part of their business where they provide broadband. I did okay with Comcast, but I'm out of Comcast right now. I thought Comcast provided a pretty good option in this space. They're a more diversified communication services company, and I did well with that stock. But this one's a pass for me based on their debt level. Their debt's too high. And their valuation based on debt, right? Their free cash flow is worth about $32 billion, but they have about $32 billion of debt. So it's almost like, what is the company worth? If you were to buy the whole company, you'd have to pay off that debt of $32 billion or take it on, which is a negative. So it's a pass for me. We have thousands of stocks to pick from, thousands. I don't need one that has a ton of debt. I don't want one with a ton of debt. In the same industry or sector, you have Meta that has net zero debt. You have Google Alphabet, net zero debt. And those companies producing awesome cash flow. I'll rather put more money into Meta or Google as opposed to buying into a very high debt company. So hopefully you found that interesting. Good luck with that stock. Looks like we got some new Android PC. What's up, man? Moderna. Hey, I've got that noted over here, buddy. So I'm going to take a look at that. I had it coming into the live stream. I wanted to look at Moderna, and we'll take a look at it. And then I'm a bag holder on MPW, unfortunately. I'm right there with you, man. I lost a little bit of money on MPW. I just needed it off my portfolio. I don't want a distraction. And I just got to get, in my opinion, don't take it the wrong way, MPW stockholders. I need to take the bad wood out of the, portfolio. Just get rid of it. I'm already busy enough. I don't want to track a soap opera, what happens today kind of. I want consistent numbers in their financials. I want a well-operated company. I want a valuable business. All those things have to be there because I have thousands of choices. Why buy a problem? I don't want problems. I want to make money. I want these companies to work for me. Okay. That's why we buy shares, is so we can be owners of the business and the brilliant people that operate that business work for us. So, all right. So we are going to Joby and then Moderna. Don't know what Joby does. Joby Aviation is a vertically integrated air mobility company, engages in building an electric vertical takeoff and landing aircraft. Interesting. Amazing, man. Look at this stuff. I am a fan of innovation, and it's so cool to see, just from a engineering and science perspective, it is so cool to see that a private entity is doing this. Thumbs up to our economy, thumbs up to engineers, thumbs up to all the people who made this happen. Now, although I'm a fan of how cool and exciting that is, I invest in stocks to make money. So let's see if this is a good investment. So this is $3.67 billion company. They're doing, this is $1 million of revenue. So that's tiny. That's like almost zero. Let me shut this down. So this is kind of a pre-market, pre-revenue company. You see that. They're likely burning cash because they're not making any money. So, man, they're burning lots of cash. And they've got 820, they've got like probably 2 years of cash left on the balance sheet. Okay. So I don't invest in a lot of pre-revenue companies, and this is not a segment that I have a lot of professional experience in aviation. So I don't know if this is going to be a great idea or not. Somebody else would have to make that decision. I would say that this is going to be met with a lot of air transportation restrictions, because obviously we have airports that have these big aircraft that are landing. So you have these fly routes, and to have a bunch of these things flying around would make it just a bigger hazard. Now there's helicopters out there already. So, okay. But what's the total addressable market of this industry? I don't know, but I'm not imagining that it's very big. Okay. Like, I don't hear of any helicopter companies that are like, oh, wow, they have a $500 billion valuation. No, they're part of a probably bigger aerospace and defense company. And aerospace and defense companies do have a lot of value, but most of them have aircraft that are designed for commercial use. This is a little more for private use, or, kind of a few people as passengers kind of use. So this one here is somebody else's investment. I think it's awesome to see that the engineering and science is coming together on that company, but it's not an investment for me. So thanks for bringing that up. That was really interesting. All right, so I forgot to call. Okay, so let's go over to Moderna. So Moderna, these guys were co-developers of a vaccine. Actually, they were a developer of a vaccine for COVID. Wow, look at that. It's down big today. Holy smokes. So this might be an interesting stock to take a look at. Let's look at their financials. The market is really, really lowered. They're going from $450 per share at the peak of COVID down to $64. They're a buy and they're discounted. Earnings per share is going to be negative. So these guys were brilliant enough to come out with a vaccine for COVID. So obviously they know their stuff. And if I would say that, let's look at their balance sheet real quick, see how much cash they have. So they have $8.4 billion of cash, and they have $1.2 billion of debt. So they have a surplus of $7.2 billion of cash. And I wonder if they have long-term investments. Yeah. So another 2.3 that might be like long-term investments, meaning long-term bonds and stuff. So it may be like they have $9 billion of cash and marketable securities. So that's a pretty good cash level. And when you look at their net market cap, right, if you're looking at $9 billion of cash or marketable securities on the balance sheet, you have a $25 billion market cap, you're really looking at a $16 billion market cap, if that makes sense to you. So it's like, wow, this is really low. If we look at their revenue, they are a $5 billion revenue company. They were very high during COVID, understood. This one here, the homework would be study what they're coming out with, their new products. What is the end market? Is the end market have a substantial addressable market? And understand, are they going to be good at it? And try to understand what's there. This could be a really good investment because they have lots of cash. They're brilliant. They created a vaccine for COVID very quickly. And these guys may be right here in this zone, but it requires a lot of homework. I'm already in Pfizer, which is it's more diversified. I like Pfizer because it's more diversified than Moderna. Moderna's kind of a one-trick pony. And I'm also in Catalyst, and I'm in United Therapeutics. So I'm good in healthcare when it comes to pharma and biotech. But this Moderna could be a really good investment, but you got homework to do, which is study their products. Let's take a quick peek at it and kind of tell you what I'm thinking. So we'll close out MPW. So I know Pfizer puts out, as well as the other companies I own in this space, they really do put, and they're doing it here, is they're putting out a nice presentation and they're telling you, what's coming next. So they had the, COVID. RSV is this other respiratory condition that elderly people deal with. And they're trying to really market this. So is Pfizer, by the way. So their competitor is Pfizer. They're going after flu vaccines. This could be interesting because the flu vaccine is something that happens every year. So if these guys are good at it and they establish like a $5, $10, $20 billion franchise here, bingo. So that would be the homework, is study how good that particular business is going to be. See, the cash and investments, $10 billion. So they have cash to operate for the next 10 years. So this guy's on their board. Who cares? Product sales are going down because of COVID's gone down. So the rest of it is kind of financials. So the homework is you got to get familiar with this and be able to set an expectation for yourself of, is this going to work? Is this business going to work? If it does, what's their addressable market? What kind of new revenue are they trying to get on their income statement? If they're successful here, this is a pretty good darn company and could be very nicely discounted at the present time. So that is Moderna. Okay, so till the end, we went over Joby. Retired guy. Joby makes all their parts in-house. Yeah, you know, great, interesting little company, but it's just not the right investment for me. Shadow guy. Stock analysis has global stock exchanges, by the way. Okay, cool. And then Alta, I think it's a comment on Moderna. Yeah, Moderna, I mean, if you bought and at the right time and sold at the right time, you made a ton of money. But if you hung on too long, you lost a lot of that money. Still, I mean, they went from $17, $20 a share to $449 a share. That's a 20 bagger. So if you sold here, somewhere around here, you made a ton of money. Hopefully some people on this live stream did so. All right, so that's where we're at with Moderna. I think I missed on NXT, so we'll take a quick flyby and then maybe end on Ternium, which was another request. So Next Decade Corporation is an energy company engaged in construction and development related to liquefaction of natural gas. Okay, so they're in the LNG market, oil and gas, energy. We talked about that. And we talked that, hey, it might be a good time to look at some energy companies because they're so darn discounted. This one's a $1.2 billion company, so it's a very small company. They are losing some money. And what's up with the revenue? So these guys are pre-revenue or? Yeah. So here's only expenses. So these guys are pre-revenue. So the homework here would be, if you think these guys have a great idea and they're going to come to market with a great idea, maybe it's a good investment, but I wouldn't have enough comfort to buy into a company that's not generating revenues yet in this industry. There's a couple industries where I would probably say I'm very comfortable in that industry. If I really understood the company, maybe I'd invest. This is not one of them. I don't have the expertise and the knowledge. I have to depend on financials and having good knowledge of the energy markets, but not expertise to really look into exactly what these guys are doing. So I'm going to have to pass on next. All right. Ternium has been a good one for me. Just over the long haul, it hasn't been a superstar appreciating stock. It's gone up and then it's settled back down, but they pay a really nice dividend. So the dividend rate is really nice. This is a steel company. They do rolled steel. They mine and they process the steel and put it to market. Rolled steel. Most of their operation is just south of the border of the United States and Mexico. So they have an advantage of lower cost labor and the market being just north of where they produce. So I really liked their strategic position. So when we look at the attractiveness of a company, it could be that they have super awesome products, but it could also be that, geographically they have advantages. Now, steel is not easy to move. If you produce it in China, you have to put it on boats to get it over to the US. Or if you produce it elsewhere, Africa or Asia, you have to put it on boats and bring it over to the US. Well, Ternium can put it on rail. It's less expensive, it's quicker. And a lot of the production that ends up in products, let's say appliances, cars, and so forth, are being assembled and produced in Mexico that end up in the US and other parts of the world. So I like their strategic position. And that's one of the reasons why I invested in Ternium. Their fundamentals are good. Now, commodity prices go up and down. And for Ternium, the commodity prices have been providing adversity, like back here. But looking at their revenue, it's been going up, but this is a little bit of a surprise. I'm not sure that I'm agreeing with this number. I don't remember it being this high. So good growth, but the company I think is solid. It has a place in my portfolio, which is, hey, this is a materials company, pays a good dividend. And when it starts working, when material prices go up, this stock's really going to behave to the upside. It has nice appreciation, and it has those advantages that I like. Overall, it looks like the stock is trading at 31.87. And if I look at my intrinsic value calculator, let that update. I'll show you what the value of the stock is according to my calculator. Man, Microsoft's got to improve their cloud version of Excel. I just started using this. I have multiple computers now that I work off of. So I thought I'd use the cloud version so I could have access to the same file from multiple computers. And it looks like I'm experiencing some growing pains. All right, so Ternium. So here it is. We're at 31.87. So right now I am operating with a small loss on the stock. I own $39,000 of the stock. It cost me $43,000. It pays that dividend, and it's down because of commodity prices. But overall, on average, I think it's still discounted by 67%. So Ternium is one of the stocks that I'm very comfortable with. I'll be a long-term holder there, especially as we're dealing with the economy is supposed to slow down. Now, what's interesting about the market is it's always looking a year into the future. And as we get into 25, I think some of these commodity companies will start to work because they're going to be looking at 26. So we're going to be looking beyond the recession that we expect in 2025. All right. So, Sebastian, NXT. I think that's a semiconductor company, right? Oh, no. Nextracker. Nextracker is an energy solutions company, provides solar tracking software for utility scale distributed generation solar projects. Okay. So it did well with the solar complex yesterday, had a good day. Now these guys do $5 billion revenue. I'm sorry, their market cap of $5 billion, and they do $2.7 billion of revenue. They are profitable. Man, they have a low PE and a low forward PE. That's interesting. Strong buy. Okay. Good growth. Very good growth. Let me look at the quarterly. Man, this looks really good. So very good growth. Good free cash. Okay, so 315. So they have on the balance sheet $472 million and total debt 146. So really net zero debt. And they have a surplus of cash. So this is an interesting stock. I could value these guys at $6 to $9 billion based on their growth. I would have to get very familiar with their products. So they've been around since 2013. They're in Fremont, up in the Silicon Valley, and solar foundations for every project. Solar trackers. They're growing really well. Okay. Yeah, this is a company I am going to look at even closer. And I'll do more homework on it. I think it has some things I like. One, it has really good growth. Okay, that's very good. And meanwhile, like if you look at solar stocks, their revenues have been declining, like solar that residential houses would get installed. These guys are growing really well. And there's a pretty good size, 2.7 billion in revenue. A profitable free cash. If we look at their stock over okay, why am I not getting that correct? So NXT. I understand why Google is not finding the symbol. I wanted to use their charting, but Google wasn't showing it to me for some strange reason. The other thing I like is this stock has been beaten down. And I think it's been put in the same kind of category with the solar stocks that are more residential based. And those have been on a downslide. So this may be a misunderstood company that, again, fits the situation where, hey, it's misunderstood, but it's really valuable. And it's a good stock to maybe buy before the market realizes, wait, these guys have been, really growing. And again, if let's say the Democrats win the White House and they do come out with a pretty ambitious clean energy plan, these guys are going to probably see a lot of benefit to that. So that's a good idea. I like Nexttracker enough to do more homework on it. And I'll probably bring it up on the next live stream to let you know how that's going and maybe even produce a video, but we'll see. All right. So we've been going for about an hour and a half. What's going on with the market? What is going on stock market? All right. So we've had a recovery. It was a small dip, but the NASDAQ is now beginning to work. S&P is in the green. Dow is slightly in the red. All right. So keep going in the green market. I'm all right with that. Again, the news economically, it came in as expected. I think the Fed has plenty of room to operate. I'm expecting they're going to go 50 and then go away until the end of the year. But they can go 25 basis points too. So Dade, Humana. So we covered Humana in yesterday's live stream. I encourage you to, it's on the YouTube channel. Watch yesterday's live stream. Humana's in there. So good luck with that. Everybody, thanks for tuning in. Good stuff today. I'm feeling good vibes. I think we're going to end positive today. And we'll see if we can keep these gains for the week. Everybody, good luck with your investments. Really appreciate you tuning in. Take care.